Dear students, welcome you all to session 7 video of Cost and Management Accounting, 3rd semester BCom. In the previous session, session 6 of this chapter, we have seen the classification of cost. We have seen in detail the classification of cost on the basis of elements. We can classify the cost as material cost, labor cost and expenses. We have classified the cost on the basis of identifiability or traceability. It can be classified as direct cost and indirect cost. On the basis of functions, we can classify the cost as factory or manufacturing or works overheads, administrative or office overheads, selling overheads, and distribution overheads. In this session, that is the session 7, we are going to discuss the classification of cost on the basis of variability or behavior, again classification of cost on the basis of controllability, classification of cost on the basis of normality. To begin with, first the classification of cost on the basis of variability or behavior. Cost can be classified as fixed cost, variable cost and semi-variable or semi-fixed cost. The first one, fixed cost. The cost which do not vary or change with the level of production in the short run is known as the fixed cost. These are the costs which are unaffected by the fluctuations in the level of activity. They do not increase or decrease with the changes in output or production. For example, rent of the building. It remains the same for the different levels of production. But at the same time, it will not remain constant always. It will be constant during a short period of time. In the long run, the rent will change, isn't the rent will increase. So it is known as period cost. Now we will see an example. The total fixed cost is rupees 10,000. We can take it as the rent of the building. The rent of the building is rupees 10,000. Imagine we are producing only one unit. We have to pay the rent 10,000 rupees. The total fixed cost is rupees 10,000. Per unit fixed cost, that is total fixed cost divided by the number of units, 10,000 divided by 1. The per unit, for 1 unit the cost is rupees 10,000. Imagine we are producing 10 units. Total fixed cost is rupees 10,000. But the per unit fixed cost, for 1 unit the cost has come down. 10,000 divided by number of units 10, so it is rupees 1,000. If you are producing 100 units, the total fixed cost is 10,000. Per unit fixed cost 10,000 divided by 100 units, 100 rupees. Imagine we are producing 1,000 units, then the total fixed cost is 10,000 rupees. Whereas per unit fixed cost is 10,000 divided by 1,000 rupees 10. If you are producing 10,000 units, the total fixed cost is rupees 10,000, whereas the per unit fixed cost 10,000 divided by the number of units is equal to rupees 1. So whether you produce 1 unit or you produce 10,000 units, the total fixed cost will be rupees 10,000 only. Whereas in case of unit fixed cost, what we have seen, unit fixed cost changes with the changes in the volume of output, isn't it? So we'll see the characteristics of the fixed cost. What is the first characteristics? The total fixed cost remains constant within the given period of time. That is, it remains unchanged within a given period of time. The same example, I'll continue. Rent is rupees 10,000. So whether you produce 1 unit or whether you produce 1,000 units or 10,000 units, rent to be paid will be 10,000 only. The second characteristics is the unit fixed cost changes with the changes in the volume of output. So here we have seen when you produce 1 unit, the per unit fixed cost was rupees 10,000. When you produce 10 units, the per unit fixed cost is rupees 1,000. When you produce 10,000 units, the per unit fixed cost is rupee 1. The next characteristics is the fixed cost is actually time related. It remains constant but doesn't mean that it will be fixed always. It will change with the passage of time. Now the rent, now it is 10,000. Maybe after a year it will be 12,000. It may become 15,000 later on. So fixed cost will change in the long run. The total fixed cost will not remain fixed forever. It will not be fixed or constant forever. It will change. Now this can be explained with the help of a graph. Now total fixed cost. So here in the x-axis we have measured the output, and the y-axis we have measured the cost, isn't it? Output and cost. Now you see, when we produce 0 units, or if you produce more, as the number of units produced is increasing, the total fixed cost is the same. It is 10,000 rupees. So when you don't produce anything, you will have to pay 10,000. When you produce 1 unit, you will have to pay 10,000. When you produce 100 units or 1,000 units or 10,000 units, the total fixed cost is rupees 10,000. It remains the same. Now, per unit fixed cost we'll see. So when we produce 1 unit, the per unit fixed cost is very high. It is 10,000 rupees. As we produce more units, what happens? We can see the per unit fixed cost also reduces. So if you are producing 10,000 units, imagine we are producing 10,000 units, then the per unit fixed cost will be rupee 1. So per unit fixed cost reduces as the production increases. The next type of cost is the variable cost. It is the cost which tend to vary or change with the volume or level of activity. So if there is any increase in the production, the variable cost will also increase. So when the level of activity decreases or the production decreases, variable cost will also decrease. For example, the cost of material which is used in production. If you produce more units, we require more materials, so the cost will be more. If we are not producing anything, then we need not incur any expense on materials. These costs are called as product costs because they are incurred for the manufacture of products. Now we'll see an example. The cost of material per unit is rupees 10. Imagine we are producing 1 unit. Then the per unit variable cost, that is the material cost, is rupees 1. The total variable cost is 10 rupees because we are producing only 1 unit. 10 into 1 unit, rupees 10. Imagine we are producing 10 units. For 1 unit, the variable cost, that is in our example, the material cost is rupees 10. Then for 10 units, it will be rupees 100. If you are producing 100 units, for 1 unit it is rupees 10. For 100 units it will be rupees 1000. If you are producing 1000 units, the total variable cost will be 10,000. Per unit variable cost is rupees 10. If you are producing 10,000 units, the total variable cost will be 1 lakh, and the per unit variable cost, that is the cost of material per unit, is rupees 10. It do not change. So we'll see the characteristics of variable cost. That is the total variable cost changes with the changes in production. So we have seen in our example that as we produce more units, the total variable cost also increases. The next is the per unit variable cost remains constant. The cost of 1 unit, it remains the same, isn't it? In our example, the material cost per unit was rupees 10. It remains the same. This can be explained with the help of a graph. You can see the x-axis output is measured and in the y-axis cost is measured. So when there is no production, imagine there is no production, the total variable cost is 0. As the production increases, the total variable cost also increases. So if you are producing more units, the total variable cost also increases. If you are not producing, it will be less. Now we'll see the per unit variable cost. per unit variable cost, it remains the same. So in our example, rupees 10. If you produce 1 unit or 10 units or 100 units or 1000 units, unit variable cost is rupees 10 only. Now we'll see the third type, that is the semi-variable or semi-fixed cost. These are the costs which are partly fixed and partly variable. They have both fixed and variable elements. They are known as mixed cost or step cost. Semi-fixed cost, it remains constant up to a certain level of output, and after that level they become variable. Now for example, you might have traveled in an auto rickshaw. So have you observed the meter? There will be minimum charge, isn't it? The minimum charge is rupees 30. Now it is fixed, and afterwards the charge is variable depending upon the distance travelled by you. Similarly, you can observe the electricity bill which you receive at home. As you consume more and more units of electricity, the rate increases. So the next time when the electricity billing person comes home, you can ask him about the billing method. Now, we will see how this can be depicted in a graph. Imagine the company has to appoint supervisors and one supervisor is required for 10,000 workers. And his salary is, one supervisor is required for 10 workers and the salary is 10,000 rupees. And if we have 10 workers, one person, and the supervisory cost is 10,000. Imagine there are 12 employees, then what happened? Another supervisor has to be appointed. So again the salary will be 10,000 plus 10,000. So originally it was 10,000, then it increases. Then if the workers are up to 20 workers, we require only 2 supervisors, the cost is 20,000. If the number of workers increase, and if we have 25 workers, 3 supervisors are required, so the supervisory cost is 30,000. So as the production increases, the cost increases, but not proportionately. So that is the semi-variable or semi-fixed cost. Now, the next way of classifying the cost is on the basis of controllability. We can classify the cost as controllable cost and non-controllable cost. Now we'll see what this controllable cost means. These are the costs which can be regulated or influenced by the management. That is the cost which can be controlled by the manager. Now for example, material cost. Material cost can be controlled by the management by reducing the wastage. That is known as the controllable cost. The next one is non-controllable cost. These are the costs which cannot be influenced by the action of a specified member of an undertaking. For example, the cost which cannot be controlled by the employee on an organization. For example, rent of the building. Let's say it's 10,000 rupees. Now the factory supervisor cannot change the amount, isn't it? He cannot reduce the amount. The manager can think of getting a building for a lesser rent, but the factory supervisor at his level, it is non-controllable. He cannot do anything for that. That is cost which cannot be influenced by the action of a specified member of an undertaking. Next comes the next classification, that is classification of cost on the basis of normality. We classify it as a normal cost and abnormal cost. Normal cost, it is the cost which is normally incurred for the manufacture of product or for rendering of service. Cost of materials, cost of wages and other expenses, all these come under normal cost. It's a part of our cost of production. So we have this abnormal cost. What is this? The cost which is not normally incurred at a given level of output. Now what happens is any loss incurred by us due to an accident, that is it arises due to abnormal conditions. So such costs are not considered in the cost of production. They are charged to profit and loss account. So there are two types of cost, normal cost and abnormal cost. So abnormal costs are not considered in our cost of production. They are charged to the profit and loss account. So in this session, we have seen the classification of cost on the basis of variability or behavior. That is, they can be classified as fixed cost, variable cost, semi-variable or semi-fixed cost. Then we have seen the classification of cost on the basis of controllability. That is, it can be classified as controllable cost and non-controllable cost. And we have seen the classification of cost on the basis of normality. Cost can be classified as normal cost and abnormal cost. Dear students, if you have any doubts, please do ask me. Okay then, thank you.